Hi guys, I want to talk to you about the Heiken Ashi candlesticks, something a little bit different. Um, and yeah, there's very many different ways of trading. So some of you might be drawn to one way of trading, others another way. So yeah, just to introduce this to you, you'll see at the moment I've just got a naked chart. It's got our traditional Japanese candlesticks that we're very familiar with. But there's another type of candlestick that you can use. If you go to your navigator and you just click on the navigator there, you'll see obviously you've got all your tools and indicators and stuff. Then if you scroll down, you should come across something that says Heiken Ashi. Okay, so once you've done that, if you just drag that onto your charts, we need to make a little bit of an adjustment to the colors, otherwise it's not going to show up on our charts. So if we go to our inputs tab, and where it says shadow of bull candlestick and bull candlestick body, just double click there. And you can set that to, when you have my greens on a forest green. Click on OK, and you'll see all of a sudden we get these other reds and greens. Now, they don't show up very well over the Japanese candlesticks, so what I recommend to do is to, instead of having you'll see it on our menu here, you've got where you can change to bar charts, candlesticks, or you can have a line chart. So you can just click on line chart, and it gets rid of the candlesticks and lets the Heiken Ashi candlesticks show through a lot better. And basically what the Heiken Ashi candlesticks do is they filter out the price noise. So they make it a little bit clearer. The trends are a little bit easier to follow. And you know how this thing works is if you've got green candlesticks with no wicks on the bottom, then that signifies a good bull trend, and vice versa. If you've got the red candlesticks with no wicks on the top, then that would indicate a strong bearish movement. So there's kind of 5 rules, if you like. So you've got the sequence of the candlesticks. So you've got obviously if you've got multiple green candlesticks, it's signifying a upward trend, and multiple red candlesticks would signify a downward trend. And again, you look out for the wicks. The wicks, unlike the traditional candlesticks, you know, we expect if the price is moving up or to get a bullish signal, we normally have the wicks poking down the bottom. But on these candlesticks, they work slightly differently, and they give the wicks more at the top. So you almost think of the wicks as being an arrow pointing upwards. And then the same thing with the bearish candlesticks. With the red ones, you've got, instead of the wicks appearing at the top, like we would see on the Japanese candlesticks, on a strong bearish movement, you've got the wicks poking down. Then you get these small candlesticks that have got the wicks in both directions. So that's kind of signifying a little bit of a pause, a bit of consolidation in the market, and you know, possibly even a trend reversal. So basically how we can use this is we want to use it in multi-time frame analysis. Basically, we look for a trend. We can see that on the screen here, the market is moving upward. So on the change of a color, for example, we had a little red run down here, and we've had a higher low. So there's a previous low. So it's important that we do this in conjunction with the trends. So there's our low, and then that would be our higher low. So we had this upwards trend happening, and then all of a sudden we see a green Heiken Ashi candlestick, and it's also got no wick at the bottom. So from that point, at the moment you can see I'm on a 4-hour chart. So from that point, I could basically look to buy, if you like. Although what we're going to do is we're going to use the 4-hour just to help us with the direction of the trends. Now, another tool just to help out would be our relative strength indicator, or RSI. So you can add that to your charts. If you go to your navigator, click on the navigator, scroll down, and then you'll see something that says RSI. Drag it on. And here we also want to make a change. So if you go to where it says levels, and for this occasion, we're just going to delete the 70 and the 30, but we're going to add in the 50. We'll make the line nice and dark, make it a solid line. And then basically you'll see here we've got the RSI going down the bottom. And for a signal to buy, we want to have the green candlestick in an upward trend. And we also want the RSI to be above the 50 line. You can see that point there, not that point because we had the green candlestick, but I think the RSI was below, yeah, it was just a little bit below the 50. So we have to be careful and we have to wait for this, for the RSI to actually get above the 50 line. So we're not just going to, basically as I explained, we're not going to trade on the 4 hour, or one can do, but we want, on this example, we're just going to use the 4 hour to help us with the trend. So we can see, obviously, we've got our lows, our higher lows and higher highs happening. You've got the Heiken Ashi candlesticks, the green has just appeared, and then you've got the RSI, which is above the 50. And from that point on, we're going to then go down to the smaller time frames. So I'm going to highlight all that until we get the red candlestick there. We're going to go down to the smaller time frame, which in this example is the hourly. And let's see where we got to. So, you know, it's the same rules again, guys. So basically, whenever you see we've had these red candlesticks come down, and then all of a sudden we've had a little change onto the green candlestick, then basically we can enter at that point. You just need to make sure that your RSI is above the 50 line. So every time that you see a green candlestick, you know, look, if it's one of these little tiny ones with the dual wicks, then I wouldn't enter necessarily on that. But all of a sudden, if you've got one like this with no wick at the bottom, making sure that your RSI is above the 50, then we can enter here. And basically just entering in on every single kind of opportunity. You're going to have some trades that just give you a kind of a break even or a small negative, and then you're going to have other trades which will give you a nice long run. So look to take the trade and look to stay in the trade while the RSI is above the 50. If you suddenly see a bearish candlestick that looks like that, which is quite a big compared to the previous ones, and then all of a sudden maybe the RSI dips into the other side. See the value there. It was just above there, so you could have actually stayed in. You could have actually stayed in that right until this point here. Maybe you saw that red candlestick and it dipped just below the 50 there. Let's just go back. So that's obviously on the 1 hour. So if we go back to the 4 hour now. Okay, so that was like an upward trend, and then now we can see the market's coming down. We're getting some lower highs, and then we get a market that looks like this, and excuse me, it's come down. So remember, we're just using the 4 hour to get the direction of the trends more than anything. So we've got our bearish candlestick with little wicks or no wicks at the top. And probably that would be a safer one. And then making sure that the RSI is below the 50, so you've got a good indication of the trend. So number one, you want to have the trends of the markets with a trend line going sloping down, or you could perhaps even use some kind of a moving average, maybe 150 moving average, just to determine the trends. Just out of interest, we can put one on 155. Okay, so here we can see that the price is now gone below that 155 simple moving average that I put on. So it's showing number one trend is down from the moving average. You've got the candlesticks below. Number 2, you've got bearish Heiken Ashi candlesticks. Number 3, you've got relative strength indicator below the 50 line, right up until this point, and you get these bullish candlesticks here, and then the RSI goes above the 50. So, all during that point, you want to be going down to the 1 hour and just identifying possible entry points in. Again, you want to have the same rules apply. So basically, you want a bearish candlestick, and you want to make sure your RSI is below the 50, and basically just trading it down, just watching the RSI as well. Watch for when it posts up above the 50, and perhaps exit your trade at that point. But you can get back into the trades. Again, if you see another bearish candlestick and then the RSI goes below the 50, as long as the higher time frame is also in that bearish direction as well, then we can just continue with that thing. So it's something to have a look at, something a little bit different. Have fun with it, just experiment a little bit. Sometimes, you're going to find that you get a few break evens or small losses, and then other times you're going to find you hit a nice long run and, can be extremely profitable. If you've got any questions, then just give me a shout. You can find me on the chat room. You can email me, you can phone me. Just give me a shout, let me know if you need any help.